This is Alan Bush with ADMIS with the Daily Financial Forecast for Tuesday, October 6th. In the stock index futures, we did start out a little bit lower in the overnight trade. Since then, though, we have seen futures coming back now, actually trading higher on the day. So we are now higher for the 6th consecutive day. Also, we had the IMF earlier this morning cutting their estimate for global economic growth. Now, normally this would be a bearish factor, but in present thinking, anything that suggests that the global economy is weakening in a very convoluted sense of logic is actually bullish for stock index futures, since any global weakness implies that there is an added need for central banks around the world to add more stimulus, which is exactly the situation that we are in right now. So we do feel that many of the major central banks around the world will soon be adding new stimulus or expanding existing stimulus. Either way, more economic stimulus is bullish for stock index futures. And I think that we will see higher prices longer term. In fact, I'll go out on a limb and say that we will probably see new historical highs in all of the major indices next year. Now, moving over to the foreign currencies, seeing the dollar index coming under some pressure this morning. This on a growing belief that the Fed will not be able to raise interest rates this year. Also, we had the euro currency trading higher, even though we did have some weaker than expected economic numbers out of Germany. Also, we are seeing the pound higher after UK home prices actually coming in a little bit disappointing, so we're seeing the pound overperforming the news. Seeing better prices in the Canadian dollar and the Australian dollar as energy prices advancing. And we did have the Reserve Bank of Australia holding off on a policy change, leaving their main interest rate at a historic low, 2 percentage points. So the dollar, I think, getting back to the dollar index, I think the main trend is still lower there, as the Fed will not be able to raise rates anytime soon. So I would expect the greenback to come under pressure longer term from an interest rate differential point of view. Over in the interest rate markets, futures basically mixed, some profit taking coming in at the long end after a string of strength for 4 or 5 days for the 30-year bonds. Our feeling is that as the global economy stagnates, that there will be more reason for central banks to add more stimulus, which is bullish for the interest rate market complex, especially the long end of the curve. And also, as far as financial futures markets is concerned, they are predicting no rate increase from the Fed until at least March of next year. Our feeling is that they may not be able to raise rates then either. So either way, look for higher prices at the long end of the curve, especially for the 30-year Treasury bond futures. So once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland. So good trading, everyone.